Hello, Paul Gerard from Price Accounting Service, back again to talk about yet another one of our many issues in this very comprehensive playlist on rental property issues and deductions. And this time we're going to break it down into two videos concerning repairs and maintenance. Wow, what a complex area this is. The tax office has a very extensive tax ruling that came out in the 1990s concerning rental property repair and maintenance deductions. Okay, and let's go to a step before that and determine just the fundamental tax laws that are going to relate to whether something may or may not be deductible. And this is the issue that concerns capital versus non-capital expenditure. It's a complex issue which generally shouldn't concern too many taxpayers, but it does concern everyone when it arises. So that's this. What is capital? Well, capital is something that's long and enduring, and it's a harder issue to define than, say, income. Capital may relate to the ownership of the property, for example. And so when we buy, let's say we buy something, it might have an enduring life. Okay. And so when we looked in our depreciation video, we discussed how it has an enduring life and it's written off over time. Well, a property is like that. So the property itself is a capital asset, and it comprises many other smaller elements. So we need to determine whether a repair is part of capital or if it's a genuine repair. And generally speaking, there's a $300 rule. So if an expense is for $300 or more, it may well constitute a capital item if it has an enduring life. So what do I mean by that? If I pay $1,000 to put water into a swimming pool, it's not part of the pool, and it's not capital. It's something that, so that's just a deductible water expense, for example, if it relates to putting water into a tenant swimming pool. But if I spend that $1,000 on putting new decking or new paving around the pool, then that's capital in nature. So let's jump forward to repairs and maintenance and just talk about the general issues in the relevant ruling. And so the first issue we need to determine is our repair cost capital in nature, or is it deductible in nature? So what does that mean? So let's go to the second first, rather than the first second. So is a repair cost deductible? And the ruling, it's huge, okay? And there's no strict rules, there's exceptions, so I'm not going to go into details, and you won't find solutions to every problem on this video, okay? That's really important. A repair cost is only a repair where you remedy a defect. So let's look at this property here. Hail impact, break some tiles on the roof. That's a repair. But fortunately in the ruling it talks about repairs to the building. Now the roof is just part of the building. It says so in the ruling. So I have had a client approach me and say, look, I've had major damage to my roof. Cyclone tore off a number of sheets, but I needed to repair all the rust in any case. And so there's a question of how much is capital, how much is deductible. Fortunately, the ruling says a roof is merely a part of the building, and therefore because you're not replacing the whole of the building, you're only replacing the roof. That's a repair where it remedies a defect. Remember that? Where it remedies a defect. If I was to look at this property and see it's fairly new, it's in good condition, if I was to own that property and rip the roof tiles off and put colour bond on, then that is not a repair because there's no defect. I'm merely replacing the roof structure with a different material. It is not a repair, okay? So lots of issues surround these issues, and often they're compromised when people undertake something other than just a repair. So for example, if If there was a storm came through here and it damaged one of these properties, let's say, we'll keep going back to my mythical investment property here, and it damages a portion of the property, then it's expected that I can remedy the defect, replace the materials, repaint it, etc., and that's deductible because I'm doing no more than rectifying a defect. But when we go further than that and we're trying to improve it, when we're trying to use different materials to enhance it or do something different, then we might have a problem. So I'll use an example of a bathroom. Great number of taxpayers say to me, Paul, my bathroom shot, I needed to repair it. I go, okay, so what did you do? I retiled it and I put a new bath in, a new shower screen, repainted and new vanity, etc. I said, well, that's not a repair, that's a renovation. They go, no, I repaired it because you see it was really old. And I go, yeah, but you replaced it all. And they say, yeah, but the shower was leaking. I go, okay, but you didn't just do the shower. No. Okay, so show me the costs for that. And they say, well, I've got one invoice from the bathroom guy, he charged me 12 grand. Yes, but how much related to repairing the leak? Oh, I don't know, probably 2 grand. Sorry, no, how much? So you need to be able to apportion it. So these issues, they're all different, everybody's different. Keep your repair costs separate from renovation costs. So there's a real tip in that. The other issue that relates, the key issue relates to depreciable issues, and I'm going to cover that in the next video in this playlist because that's a slightly separate issue, and we can come back to the bathroom example. So yeah, keep your repair expenses. I do suggest photographs at times that show damage. There's no better argument to convince the tax office of damage than a photograph of something that's damaged. So for example, your sewer's blocked, you dig it up and you find that cracked pipes, you've got a photograph, then it can't be alleged you were doing something different. The other key issue to remember with repair and maintenance costs comes back to when you first buy a property. Initial repairs. Now, initial repairs are never deductible. The reason, whether you know about them or not. Okay, so for example, let's say you buy an investment property, you find your sewer's blocked 3 days after you buy it, plumber excavates down, finds tree roots in there. That photograph, the ATO is not going to help you, okay, because it's actually going to do more harm than good, because it demonstrates an initial repair, the sewer was blocked before you bought it. Yes, you didn't know about it, but nonetheless, your purchase price reflected the condition of that sewer at that time, like it or not. So initial repairs, non-deductible. And again, I'm going to refer you on to the next video because in some instances you may well find that there's still a depreciable element to these things. So we're going to flick to the next video shortly, but that's it for now in terms of our repair and maintenance expenses. Have a look at the ATO ruling if you've got substantial repairs and maintenance. Have a look before you do your repairs too, and get your head around repair and maintenance expenses in the ATO Rental Properties Guide 2017. It'll help arm you with the knowledge and information so that you can have a chat with your tax advisor and get the right sort of guidance before you start and afterwards, so you've got your receipts right and things like that. Okay, so until then, Paul Gerard from Price Accounting. We'll see you in the next video where we're going to extend this discussion further.